Hello everybody, this is Toni Turner and welcome to the market now as of about 10:45 a.m. Eastern on Friday, August 19th. U.S. stocks dropped today with the corporate earnings season winding down, so investors are now focusing again on whether the Federal Reserve will hike interest rates and when it will happen. Investors today are skeptical ahead of next week's annual meeting of central bankers from around the world in Jackson Hole, Wyoming. At that meeting, Fed Chair Janet Yellen is likely to confirm expectations for a slow pace of rate increases, but recent hawkish comments from two Fed officials have clashed with the central bank's position that more data is needed before rates can be raised, according to the minutes of the Fed's July meeting released this week. Traders are now pricing in a 43.1% chance of a rate hike this December. And on that note, let's move ahead and look at three charts that could give us some insight into the week to come. First of all, as we usually do, we're going to look at a daily chart of the S&P 500 Spider, the SPY. As you all know, this is the tracking stock or exchange-traded fund that closely follows our S&P 500 benchmark index. Well, I have to tell you that nothing much has happened since we talked last Friday. We did get another all-time closing high this week on Monday. The new all-time closing high for the SPY is $219.09. That's about $21.90 on the S&P 500 itself. So as it would be, the SPY is trading now just above its 20-day moving average, the red line on this chart. Certainly above its 50-day moving average, the green line, and the 200-day moving average, the black line on this chart. So it's just been, after July's consolidation, a little dip down, and now the SPY is actually building a little consolidation on top of last month's consolidation. That's very pleasant. I have to say, in all my years in the market, which are many, I've rarely, I'm going to say, ever seen a market consolidate or the SPY consolidate for these kinds of periods of time without at least popping decidedly higher or falling decidedly lower by 2 or 3 or 4%. So this is truly amazing. We're going to have to keep up good news. Now that earnings season is gone, as I just said, now all eyes are turning on to the next possibility of a rate hike. Again, all eyes will be on Janet Yellen next week at the Jackson Hole conference. So we'll have to see if that has any influence on the markets. Otherwise, we need good news to pop the SPY higher, to pop it over 219 and send it up to 220. Or if that's not the case, then the market will pull back here. Some profit taking could come in if Fed watchers think rates are going to go higher. So we've got very near-term support here, price support at 217 on the SPY. Our next level down is at about 215. And then, of course, we have the June pivot high. The June pivot high here comes down in at about 213 or so, right where the 50-day moving average is right now. If we look at our RSI, our 14-day RSI, we see that it's poking along here. It did, as I told you last week, it didn't make a higher high with last month's little bump up from the, not hardly anything you can see. Right now it's feeling very lethargic, the RSI. It's still above 50, which is good. The MACD here, the moving average convergence divergence oscillator, I'm not sure if you can see this. It's plotted over the volume spikes. The MACD line, the black line, has moved just below the red line, the signal line, which is a very, very, very excuse me, slight negative. Otherwise, it's just moving sideways. but again above the zero line, which is positive. So we wait. We wait here and see what happens next. The power shares QQQ. This is the ETF that closely follows or does follow our NASDAQ 100 index. And I'm thinking that this is going to have a very strong influence on the market if it does decide for some profit taking to come in. When I captured this chart this morning, the QQQ was trading at $117.38, certainly above its 20, 50, and 200-day moving averages. Now, as we like to remember, the Qs had an all-time high in March of 2000 at $120.50. Very close to that now. That just a little over 16 years ago. And tech stocks, the Qs are staying strong here. Tech stocks are staying very strong so far. Semiconductors have had a fantastic run up, as well, of course, as the social media stocks. Now, if we look down at the QQQs, if you could see this line here, you would see that the RSI is still at just barely above, right at 70, which means that this particular index remains overbought. That means also that it could be due to pull back. When the RSI gets overbought, that means that the asset is due to pull back. May not be right away. This isn't a very fast indicator, but that is what it's telling us. The MACD here, which is an even slower indicator, I don't think you can see it again here. It's starting to roll over just a little bit. The MACD line, again, is barely below the signal line. So nothing much to talk about here, but it isn't going higher as it's moving down a little bit. So that's something we put in our back pocket. We also note here that the Qs are staying high on low volume, and that's actually the case with the SPY as well. So that's another negative. When indexes stay high on low volume, when any buyers come in at all, or any sellers, I should say, come in at all, then that can take it down pretty quickly. But we see. Can't argue with success here. As earnings season tapers off again, the Qs are going to need other good news from other quarters. I'm going to be watching the FANG stocks. I'm going to be watching Facebook, Amazon, Netflix, and Google, or Alphabet as it's known now, to see if any cracks occur in those. Also to that quartet, I'm going to add Amazon and possibly Microsoft, not Amazon, Apple, and possibly Microsoft. And if I see any of those start pulling back with any degree of any degree of concern, then I will say that the broader market could take a pull down. Okay, so that's what I'm watching this week. Keep an eye on the Qs. If it starts to roll over and go below the 20-day moving average again, I think that will possibly pressure all the markets. Our final chart today here is one we haven't looked at in a long time. iShares Transportation Average, the IYT. This is an iShares ETF. It's hanging pretty tough here, and that's a good thing for the overall market. Right now, as I captured this chart, the IYT is trading at $142.09. What I like about it right now is it's trading just above its 20-day, its 50-day, and its 200-day moving average. Top components in this exchange-traded fund are FedEx, UPS, Kansas City Southern, Union Pacific, Norfolk Southern, J.B. Hunt. So it's airlines, it's railroads, it's trucking, transportation. As we see the IYT again right now, it's trading above these. Got some strong volume yesterday. RSI is slightly moving up, just barely above 50. I like that. MACD line is trundling along just above the zero line. If the market continues to move higher here, I may look at the IYT as an ETF of interest. If it can stay above this 50-day moving average, which is coming in at $138.80 right now. If it can stay above that 50-day moving average, and certainly it has to stay above the black line, the 200-day moving average at $137.26, needs to stay above those two lines. If the market starts moving higher next week, I may look at the IYT here just above $142 as long as it gets into and continues a move up. If it does so, it could potentially move above this resistance line here at about 145, and who knows, on a strong market, it could potentially move back up toward 150. So I'll be keeping an eye on that next week. Now we'll go on to the coming week's economic reports. But first, please join us this coming Monday online from 4:30 to 6 p.m. Eastern for our next session of Toni's Market Club. We'll talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. This is a low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. So please join us. For those who cannot attend our live session, no problem. The recording of our session is available to all of our members a few minutes after the session ends. And now for the next week's economic reports. Monday, not much going on in that area. Tuesday, new home sales. Wednesday, we have existing home sales and crude inventories. Thursday, we have durable orders, jobless claims as usual, and our natural gas inventories as usual. Friday, we have the GDP and Michigan sentiment. Again, join us for Toni's Market Club this coming Monday. Don't miss out on this fantastic opportunity to raise your trading knowledge and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is the Market Now.